Hi, I'm Simon Schwall, the CEO and founder of OCO Insurance, and I'm listening InsurTech Business Series podcast to keep informed about the insurance news in the continent, and I invite you to do the same.
It's a pleasure to be speaking with each and every one of us. But just to start off, and maybe start with Sam, right? I know that you've spoken a bit in your profile about what you do and why you do what you do. But in terms of the insurance beat now, right, and what Fleury is doing, why is that important?
So starting off, thanks for the opportunity. I will say that the reason why Fleury exists, has less to do with insurance. And, to be honest, we avoid the insurance tag and everything else that comes around that from a compliance standpoint, but has a lot more to do with the people that we serve, right? So we're primarily focused on global migrants as our core customers, and we build solutions around them based on their needs and the people that they care for, right? The more interesting part about the opportunity that Fleury has is the fact that, while we're addressing core problems for immigrants, primarily around how they support their family, we also realized that we had the opportunity to affect access to care, which, if you look at emerging markets, is not primarily driven by insurance, unlike North America. Right. Now, in that regard, what we're doing is taking the existing insurance industry, as well as healthcare providers, and creating an opportunity for them to serve a greater portion of their market simply by connecting them to a new source of financing. Right. And so in this case, we're approaching a market problem from a different perspective, right, while enabling the drivers of that market, right? So when you look at the partners that we work with, AXA as an example, Nationwide Medical in Ghana, all of these companies have been doing their own activities within the insurance space for decades, right? We're just allowing them to be able to do more of it, to serve more people, but also to address a problem that hasn't been viewed from this perspective, which is the fact that immigrants will continue to send money to support the people that they care about. We're just helping them do it more efficiently and supporting an industry in the emerging markets that we're in at the same time.
Okay. That's interesting. From that point of view, I want to ask Ashley now, why do you do what you do with Athena, and what the focus is in terms of your work?
So for Athena, we're all about driving more inclusion. So we're trying to create a Nigerian, Athena is focused on Nigeria specifically, although we have sister organizations Pan-Africa, and collectively form what's called an FSD network. And so for Athena, what our vision is a Nigerian financial system that works better for everybody, particularly low-income groups. And coming back to the topic of insurance, one of the things that Athena does is, as a market enabler, is research. So we provide credible data about what people are actually doing, including through a nationally representative survey we do every 2 years. And our data shows that right now, only, or as of last year, only 2% of Nigerian adults were insured. So one of the reasons that we're really interested in, so innovation is really core to what we try to promote. And we've done a lot of research and engagement around digital financial services and fintech, because we see, as Sam just mentioned, insurance has existed, but we need some new models to kind of unlock access for those who are currently excluded, to maybe digitize and make more secure and more efficient and more beneficial some of the behaviors that are already happening informally. And there's a lot of opportunity through new technology and new business models to do that.
Okay. Thank you very much. I think the research bit is definitely very key. I'm going to come to Zachariah last, right? But Benro, Optimal, right? And looking even at your prior experience, there was no insurance in that conversation, right? So why do you do what you do at Optimal?
Yeah. Very interesting. So most people don't realize that actually have a very strong insurance background, but never worked in the insurance industry. So I studied insurance for 4 years in the university as my first degree. So from a technical point of view, I probably understand a lot of insurance. But, I graduated, I went into insurance because I always saw the opportunity, from a long-term point of view, like Ashley said, only 2 out of 100 Nigerians have any form of insurance or less. And it's worrisome. So I grew up in the era when the banking sector transitioned from a very manual era and suddenly has built lots of billion-dollar worth companies. So it's for sure that insurance would also go through that kind of curve. It's just about how, when, and who are the players that would enable that growth. And so for me, it has always been about the long-term opportunity about insurance. But after graduating from university, I never worked in the insurance industry, and this was deliberate because I was shocked in my first exposure to the insurance industry, and I felt that there was no change that I was going to be able to effect coming from within. And I felt that I had to go learn a bunch of other skills and actually approach the problem from a different angle. And so I went to get an MBA, worked a bit in private equity, and got the opportunity to work with Jumia. So I was very early founding team of Jumia, even before it was called Jumia. I set up the fashion, first set of local recruits in Jumia, set up the fashion called Sabunta out of a warehouse back in 2012, warehouse and an apartment in 1004. Literally, there was no office there. And that was my realization that this is what I wanted to spend the rest of my life doing, just building tech-enabled businesses. And given my background in insurance and my passion for the insurance space, it only makes sense to build for the insurance space. I feel like I would be doing insurance a lot of disservice if I was building in other areas and not actually dedicating my knowledge, exposure over the years. But on a more personal note, I've seen the impact of not having insurance personally in my own life. Growing up, seeing my parents, maybe struggle from a car accident, a minor car accident that, should probably take insurance to fix in a week or two, ends up putting the car down for maybe a whole year or two. Now, a car that's supposed to be income generating for just because he didn't have a basic insurance cover that is compulsory for everybody. So I've always wondered why. And so I've decided that, this is one area that I'll spend, the good part of my younger life trying to solve. And having engaged with the insurance industry over the years, digitization is clearly going to drive that growth, like Ashley referred to. Octamal is just really building the infrastructure for the digitization of insurance. We see the insurance as a value chain. What happens through that whole insurance journey? We're trying to enable, build the rails, build the infrastructure to enable current insurance players in the industry to deliver a much better insurance product to their service, to their current customers, and also unlock this opportunity. Everybody just keeps talking about the potential of under penetration for so long, but I think it's and so that's why we built Octamile to actually give our best shot at solving this problem.
Okay. All right. Thank you very much. I can it also sense the passion in there, right? And so thank you very much. So for Zachariah, right? Why investment? I mean, we're reading your your profile there, and there's a musician part there. I mean,
you mean why insurance or why?
Yeah. Why investment? Like why in that space with Launch Africa?
So you have folks like, incredible entrepreneurs like Sam, and do you prefer Benro or Doro? What do you prefer going by, Doro or Benro?
Benro works, but these days people call me Dara as well, more like Benro. But Benro is my first name.
Sweet, I'll call you Benro though. So there are folks like Benro and Sam that are so passionate about what they do. They're experts in their domain expertise. I mean, just to use the word expertise twice in one sentence, but that is something that I could never do. I'm probably undiagnosed ADHD. I cannot do just one thing. And the world moves forward because of people like yourselves, entrepreneurs like yourselves. But entrepreneurs like yourselves need enablers that can support and back multiple people in different value-adding ways. So to sort of dumb it down, I love knowing a little bit about a lot of things, because I get too bored personally knowing a lot about just one thing. So if you wake me up at 3 a.m. and say, could you talk to me about drones in agriculture and also about education in the digital space in Kenya. What's happening in healthcare in Rwanda? I'll probably have a coherent explanation for all those things and 95 other things. But the world sometimes needs generalists as much as they need experts. So I think I'm playing my little small part in the African continent to help grow ventures like Octamile and Flurry and the many others. And then you have folks like Ashley that put it all together by working with governments, with corporates, with think tanks, with DFI. So I think every part of the ecosystem plays a very unique role, and I happen to have found my niche in the VC space. The one thing I will say is, as an early investor in a lot of African tech startups, you've got to add a lot more value than just your money. I'd actually switch the question on its head and say, money is probably the last thing you should be adding from a value creating perspective. When you get to Series B and Series C, of course, your checkbook goes so much further. But if you're at seed, pre-Series A, or even pre-seed, you got to be adding networks. You got to be adding value from a POC, a proof of concept, a pilot, a JV perspective with large insurers, with banks, with reinsurers, with telcos. You got to be able to liaise between the large corporates on the continent and all these passionate founders and be able to tell a story that makes sense in corporate speak. And for many years, you had so many of these incredible African founders. I've lived in Africa now for 11 years that were so afraid to even walk up to the front lobby of a Sanlam or an Old Mutual or a UAP because they're like, oh my God, these old men with briefcases, they're just so intimidating. There's no way I could talk to Old Mutual, or a Sanlam or a Discovery. And I happen to live in South Africa, where every major insurance company on the continent, their office is in a 1 mile radius in Johannesburg and Sandton, for those that haven't been there. So part of what we do as a fund, as an accelerator, and I've spent 10 years doing this, is just being able to be a bridge between distribution, which is, by the way, the biggest hurdle to scaling any tech startup on the continent is distribution and data. And Sam, just in full disclosure, our fund is an investor in Flurry. So, the biggest hurdle is distribution, right? So if you can't acquire customers quickly, efficiently, and with minimal resources, you're screwed. you're going to spend a lot of time and money trying to acquire customers, and you can't focus on, your product, your tech, your marketing. And that's the role of investors. VCs really have to, as they say in baseball, step up to the plate. It's your term. It's your time in the limelight, and you got to do something for your founders that they cannot do themselves. Founders need to focus on product, on tech, and on making the best possible solution for a market. And it's your job as the VC, as an advisor, to help them with everything else. Because when you free up time for founders, you help the ecosystem grow. And a lot of VCs, unfortunately, I won't name them, just don't do enough of that. And one of the things that I strongly believe in is, with the right team, we can help founders a lot more than they can help themselves, because we help with all the stuff on the outside. Okay. That's one of the reasons why I do what I do.
All right, great. I mean, thank you very much for that. That was rich. So looking down on insurance and InsurTech specifically, right? I want to go back to Ashley, right? In terms of the work that you do and what you are seeing in this space, right? Considering where insurance is, today in Nigeria, even on the continent, are there other numbers, that you could share with us that talks about kind of like the potential or not of, InsurTech, in this space, and the things that InsurTech can actually help the industry to do and achieve?
Hey, this is Brian Falchuk from Boston, Massachusetts in the United States of America. I want to give a shout out to the InsurTech business series, Falumi and Damola. What you are doing to help move the industry forward in the African continent, but also more broadly for the industry at large, is so incredibly important. As I think about the future of our industry, it's conversations like the ones you're having that will help us move forward. So congratulations on the success of the show. Please keep at it.
Yeah, sure. I mean, I think that the potential is really tremendous. So obviously we see that almost, at least for Nigeria, almost no Nigerians are insured, if I were to summarize. I mean, even those who have insurance may not have their full set of risks covered, right? So there's a lot of room for improvement in this space, and there's a really tremendous untapped market. And while we've seen, acceleration in the fintech space in Nigeria, a lot of activity initially has been around payments and credit or lending. So there's the InsurTech space is sort of less occupied. There's a lot of opportunity to still come into that sector, and it's really great to. I think that the panelists here actually provide some really good examples around the breadth of different types of offerings that can come into that space. I mean, in terms of, just to talk a little bit about potential. So really, I mean, the potential market is everybody, right? Everybody sort of has to manage risks in their lives. And we, Athena, for example, in our nationally representative access to financial services in Nigeria surveys, we ask people, did you have an event in your life last year that made it really difficult to pay for things? And 6 out of 10 people said yes, right? We see that only about a quarter of Nigerian adults are considered financially healthy by our measurement. A lot of people are financially vulnerable and really just one risk away. As you mentioned, one car accident, one illness away from falling into a situation where they can't make ends meet. But I think in terms of, potential reach, we see that, we still have ways to go, but over half of Nigerian adults now are in the formal system. So 45% are banked. Some others either use microfinance banks or some other regulated providers. Many of them, have BVNs. About half of Nigerian adults are in the system, increasingly transacting digitally, increasingly using agents as well, instead of just bank branches. So we see kind of an easier to reach market of the people who are already in the system. And then I also see a lot of potential around kind of expanded reach to those who are not, the other half of Nigerian adults who aren't in the system. So as I mentioned, we see more growth in agent networks. I'm hopeful that with the new payment service banks that are coming online, that they'll hopefully expand some of the reach we've not been able to achieve in Nigeria, bring more people into the system, into having accounts, having BVNs and things like that. And those can then, insurance providers can then layer on top of those digital rails and extend insurance services to those people.
Thank you very much for that. Benro, so looking at, some of these numbers and some of the things that Ashley had mentioned, right? What's the color of the opportunities that you are seeing for insurance distribution, really, on the continent? I'm sure that your goal is for the continent, not just Nigeria. Now, at least you can start off in Nigeria, but what are you seeing in terms of how you're really solving those things?
We see various models happening in the insurance space with regards to distribution. And in the past, one of the things I've done in the past was actually I co-founded an online comparison platform for insurance, super early days. So that was a learning around distribution as well. And but timing also was also a very important factor, back then. So I think that distribution will take various shapes, and it's got to come from the existing infrastructure, from the existing, where there's existing market. So like Ashley said, there's BVNs. We know people have bank accounts. We know people trade. So I think that's where distribution needs to be plugged into. And so it's going to come in various forms of partnerships, whether it's with the government, with the regulators, whether it's with existing companies, fintechs. It's going to come with a lot of collaboration where there are existing users, where there's existing demand for for things that people are already consuming. So you see, insurance is kind of like a lifestyle product, and except that it only comes afterthought most times after you acquire the transaction. So people have to figure out how to make it much, much more seamless and integrate this as easily into the lives of everyday people. And I think that's what that's the fundamental theory behind how we approach distribution. We're building various tools for various partnerships, for various players within the ecosystem to enable distribution. One example is we have an app on Play Store, or rather about to go live on Play Store. It's been in beta for a few weeks now. So what this does is enable existing car dealers to sell insurance at the point of sale. What kind of tools can you build for the car insurance, for the auto industry to sort of make it much seamless, much easier to buy insurance? How is it currently happening? So it comes from a lot of sitting with all the existing players, existing regulators, and try to explore, innovate around business models. So a lot of what we're doing is business model innovation, just trying to find a new way, given our own experience, our own specific context of the Nigerian economy, and how to innovate around the insurance within the regulatory context and within the tech environment as well.
Okay. All right. Thank you very much. Thank you very much for that. Speaking about innovation, right? 2 weeks ago, FSD Africa, launched an initiative, the Bima Lab initiative, in Nigeria. So this is something that's been running in Kenya and then in Ghana. And it's an exciting thing because, again, we want to also accelerate innovation within the space. And so from a point of view of participating in some of these kind of accelerator programs, Sam, now, I know that you have been a part of a couple in the past. What kind of value do you get from being a part of some of these things? And I mean, why should InsurTechs who are on this call be taking advantage of this opportunity that Jima Lab offers?
Hi, everybody. My name is Bente, and I'm the founder and CEO of MTech, and we are based in Kenya. I am very passionate about the disruption of the InsurTech space, and together with our model MTech, we are actually serving insurance platform and also white label solutions for the industry. Please keep on listening to InsurTech Business Series podcast, and I hope to see all of you at the conference in December.
You might be opening a can of worms, if you're asking about accelerators, but let's try not to get there, but instead look at the larger opportunity, right? So two things that I wanted to touch on as Benro was speaking. One, I think part of the opportunity that exists is for us to look at our daily lives and the areas where we're currently investing in to start to create opportunity around there. What ultimately we all want in the ecosystem is for the larger population to recognize the need for insurance, right? Because everybody, for formal insurance, everyone in Africa has insurance. Right, his name is Jesus, but when you move past that one, right, you're gonna have to get like people to adapt to this whole different type of insurance, right? Because Jesus has agents, he has pastors in churches who really do a very good job of distributing that kind of insurance. But on our side, I look at it as Africa's investment tends to go towards fintech, especially for now. We need to look at the areas where people are actually interacting with technology and interacting with services of this new to start inserting that, right? Mero spoke about, how buying a car, right, is the right point at which you want to be introducing insurance rather than creating friction with a whole new process that is standalone from that. And so when you look at people taking loans, all of the fintechs that we're seeing, right, are all geared around lending, savings, investments. And these are the places where we need to start thinking about this. In the US, right, when you save money, right, $250K of that is federally insured. That's your FDIC, right? Now, how do we create opportunities for this? Because our governments are not necessarily going to do that. And so we need to start looking at ways that we can create micro behaviors and insert insurance in these ways. As you look at things like lending, right? Recently, we've had these situations where people are posting either obituaries with the pictures of lenders or people who went to borrow money, right? And are defaulting and all of that. How about we started creating a little bit of insurance for the money that you go borrow, right? Either pegging it to your inability to work as a result of a sickness, disability, or anything else, right? Or when we buy homes. Think about it. Most people, the largest assets that they will own in Africa, and we spend 40 years plus building our own homes, right? Only to have a thunderstorm, lightning strike, the house is gone, and 40 years of your life is gone. There are things that people tend to look at and think about a little bit more securely or more interestingly than others. It's hard to sell health insurance in Africa, Why? Because as a people, you rank all of your other needs, right? And until your body is literally dying, you're not going to prioritize that, which was intentional for Fleury, right? As a starting point, because that situation that Africans tend to create for themselves is felt worse by the family member who's abroad that they're going to tend to and say, oh, mommy was just sent to the hospital, or there's an emergency, or this person needs a surgery, right? And so for us, while you deprioritize that on the continent, the person who's abroad has to hold that as a priority and creates the incentive for them using a product like Fleury, right? And then coming to the second question that you asked, right, around the way that we're looking at this opportunity, right? For me, it's about access. How can I create opportunities for us to be able to work in making more people be able to access insurance? There's something that we're working on that I can't announce now, but on the wider sense is around taking cities and state governments, right, and tapping them into the opportunity that Fleury is seeing. Right. And you're going to see that, shortly. But what we're doing at Fleury is essentially like creating our own way of socializing access to care, right? At this point with Fleury Health, where if you look at the National Health Insurance Scheme, you want people to be able to contribute to it. But if we took that and we turned it around, right, can we incentivize a different type of population to pay for this? And that for me is the opportunity that I see in being able to take the problems that we're all trying to solve around insurance distribution, insurance access, and look at alternative models, right, for the other people who might be interested. Be able to finance it, right? Because the financing will always be a challenge from the larger consumer base. But if you start looking at the other people who have an incentive to finance that, right, and I could tell you one of the most interesting ones is for VCs like Zach, right? Investing in a founder who lives in Nigeria, right, should always come with a key man insurance policy. Period. Because the amount of risk that a founder takes being in Nigeria, right, going from office to home and being stopped, right, or traveling between Abuja and Lagos, driving, right, what kind of that risk is. We should be thinking about how we really are building behaviors from there, and then starting to get the companies who are VC backed to start thinking of insurance in a different way for their own employees, right? And the key employees that they're investing in. I think these are some of the things that will start to build behaviors. First from, the group of people who are building companies and then their employees, and you'll start to see it in the wider workforce, right? Which is also going to start trickling down to how we decentralize it to the folks that are buying from a kiosk or maybe a mobile money vendor.
Oh, thank you very much for that. So Zach, right? Sam and Benro, and so one thing that is clear from what they are doing is, they're building purpose-driven companies, right? They are tackling a specific thing. Benro creating that infrastructure, and Sam seeing that opportunity and going after it. Are those the kind of things that you're looking for in InsurTech, who you are reviewing and who have feedbacks to you? Are those the things that you looked at, in the companies that you are invested in currently?
I think there was a point that one of the panelists made earlier about the importance or the importance of not harping so much on creating jobs and measuring impact. I understand why a lot of funds pay a lot of importance to ESG, for example, or into, with, going through a fine-tooth comb around how people can measure impact in their investments. And I understand that. But the reality is if you've got a continent of 1.4 billion people, of which, Nigeria alone has about 250 million people, and the adult population in Ashley's words, 2%, I think that's about right, 2% are uninsured, are insured. Still, there's a huge opportunity from a commercial perspective to just increase the awareness. I mean, insurance has always been a grunge purchase. Let's just, call a spade, right? So the key message that needs to be conveyed is that insurance is less of a grunge purchase, but it is saving lives. It is saving relationships. It's saving, the future of children's education, the future of health. And anything in life, the moment you bring it down to something that I call it the push versus the pull, right? If you are pushed to doing anything, you're going to look for ways to not do it, right? But if you're pulled to something, you do it because you want to, not because you have to. So the marketing around, I think the insurance industry has a big problem on its hands from a marketing perspective, right? Why are casinos perpetually full, but insurance companies cannot sell a policy, right? It's because casinos pull people, insurance companies push people to buy something. So they need, and of course, I loved Sam's analogy of, the biggest competitor to an Old Mutual or a Sanlam or a Discovery or a Hollard or a UAP is the church. And he's 100% right. I've been to Lagos several times, and I've talked to very senior people at insurance companies, Bima and the likes of it, and they're like, no, our biggest challenge is pastors and mega pastors, and I get it. I think, but then on the flip side, look at the funeral insurance industry, right? Funeral insurance has more cover per capita on the African continent than anywhere else in the world, right? Higher than most of our investors are from Europe and specifically Switzerland. And you want to know about overinsurance, go to Switzerland. People have insurance on everything. It is easier to sell insurance in Switzerland than it is to sell jollof rice on the streets of Lagos. It is, wow. You can sell insurance to anyone. The Swiss are just paranoid about everything. Which is why the three largest reinsurers in the world are in Switzerland and Germany, Munich Re, Hannover Re, and Swiss Re. But the one thing that the continent has going for itself is funeral insurance, and to a large extent, that's backed by the church, right? So I think what needs to be done and this has nothing to do with tech, so this is completely outside of my domain expertise, but stories need to be retold. Right? Why did a country like Nigeria that 6.5 to 7 years ago had almost no fintech investment at all? I've been doing VC on the continent since 2014, and there was nothing. The most innovative fintech in Nigeria, 10 years ago was InsurSwitch. And I wouldn't call them innovative by any standards today, right? They happened to be a unicorn just because they were the first kids on the block, right? And Nigeria today, 6.5 to 7 years later, is, the holy grail of fintech on the continent. What happened with fintech 7 years ago in Nigeria was the stories that were told about the need for financial inclusion were told in the right way. They were around, how can I pay and get paid through a mechanism where I save money, I can help my relatives, the whole remittance argument. If I can't get a loan from a bank, how do I approach alternative lenders? That's how the unsecured lending industry boomed, right? So you have to look at what landed well in the fintech space and learn from those stories and try and apply that to the InsurTech industry, right? So, for example, if you look at, so the hardest insurance to sell is life insurance, right? I think we can all agree on that. Maybe people disagree, but it's one of the hardest. Go talk to a life insurer; they'll tell you the hardest insurance policy to sell is the life insurance policy, right? And for lots of reasons. Think about it. What is the average age that people get married today? It used to be 19 during World War II because people wanted to have kids before the men went off to fight in the war. It was insurance against not having. I mean, so marriage. If you think, I'm digressing here, but it's interesting stuff. Marriage, the concept of marriage was essentially insurance against a man dying in a war. I bet no one's told you that, right? But if you think about it, your great-grandparents got married during World War I and World War II so they could continue the bloodline. So marriage essentially was an insurance policy, if you think about it, right? But I mean, if you fast forward generations, less and less people get married, right? Less and less people live together. People are having less children. So in a life insurance policy, what are you essentially selling? You're selling a huge payout to a beneficiary. If you're not married and you don't have dependents, why would I ever have insurance? If I'm 6 feet under, I don't need anything. I don't care if, you see where I'm going, unless you want to insure your parents. And we've moved away from joint families to nuclear families. So this is all cultural, anthropological, non-quantitative stuff, but it's so important to understand the life insurance industry. So if you're an InsurTech, right, this is important to folks like Dora and Sam. If you're an InsurTech, you should be spending all your hard-earned time and money pitching life insurers because they are losing business every minute. Life insurers are going bankrupt because millennials and Gen Zs ain't getting married. If they do, they're getting married much later. They're not having kids as we used to in our generations before. So life insurance is becoming completely redundant. So anything you can do as an InsurTech to increase the margins and volume that life insurers have is like manna from the desert to them.
Hi, I'm Simon Schwall, the CEO and founder of OCO Insurance, and I'm listening InsurTech Business Series podcast to keep informed about the insurance news in the continent, and I invite you to do the same.
It is easier to pitch or to solve a problem for a property casualty insurer or content insurance. I mean, content insurance is the easiest insurance to sell because you're insuring against crime, against theft, against looting, whatever. But life insurance is extremely hard to sell. So a lot of InsurTech founders stay away from life insurance because it's hard to sell. But ironically, that's what you should be selling the most because your distribution agents, which is the old mutuals, the Sanlams, etc., are going under and they will do anything. They will throw money into solutions that can keep them afloat longer, right? So I would say life insurance is probably the most disruptible of all the insurance solutions out there, followed very closely by medical insurance, then property and casualty, and then probably motor vehicle. I mean, the majority of InsurTechs in Africa are solving, motor insurance problems, right? So I'm just saying it's before people start building beautiful pieces of technology like Sam and Dora building, think of who you're addressing and why you're addressing it. And sometimes it's often important to start with the story. When we back companies at this stage, we don't look at spreadsheets because the only thing right about spreadsheets is that they're wrong, right? So we look at why you're doing something. Have you really understood the cultural dynamics of a market before you get into it? And how have you been able to tell the right story to intermediaries, which are your distributors? And once you solve that problem, then we can start talking about ROIs and returns and impact. But
wow. Great. I'm going to come to Ashley a bit around innovating around some of the things that Zachariah had mentioned, right? But Zachariah, just to get your thoughts on this now.
By the way, Zach is cool. Zachariah sounds like I've done something wrong.
All right, Zach. Yeah, right. How far are we, as InsurTech from the very first InsurTech unicorn on the continent? I mean, how far matured are we? We're seeing a number of people come up. Yes, there's Cassava, there's Lamy, Alpha Direct, who you're backing. But how far are we from, the InsurSwitch, the Flutterwave?
I mean, I'm the forever optimist, but on this, I'm gonna play devil's advocate and say we're probably a couple of years away from a unicorn in the insurance space. I hope that Sam proves me wrong. But, or for that matter, by the way, Dara, I know one of your largest backers, EcoVC. I love what they do. So you're very grateful to have them as on your cap table. The thing with insurance is you need to be able to scale across borders as effectively as you do in the fintech space. And up until now, that hasn't been the case. Once that starts to happen, you'll see a lot of innovation and much higher increases in valuation in the InsurTech space. The reality is insurance tends to be very country and region specific, unlike payments and unlike asset management and unlike lending. To get an insurance license, and this is the regulation side of things, it's not as easy as getting a license to provide credit. One of our biggest investments is Kuda Bank. They're 2.5 years old, and they have, you could literally get a license to lend and accept deposits by acquiring small microfinance banks across the continent. And Bob's your uncle. In 3 years or in 2 years, you're now in 16 countries. With insurance, it ain't that easy, right? So the moment regulations across the insurance industry ease up and you can scale across borders a lot easier, then I think you'll see valuations pick up. Also remember that the multiples, that this is an important, but I don't want to talk too long here, but if you're an InsurTech, to take, for example, Alpha Direct, one of our investments in Southern Africa, the multiple that you get as an InsurTech is basically a multiple of premiums collected, right? So your net revenue is your net premium collected for the most part, right? Unless you're a software as a service platform, we won't talk about that now. So it's very hard as an InsurTech to get a multiple of anything more than 10x your annual revenue. So because although your revenue is a lot more stable, right? It's essentially premium collection. The moment you stop paying your premiums, your revenue tap runs off, right? So if you go through a financial difficulty or you don't feel like paying your premiums or you want to stop your cover, it's very easy. You shut off the tap. So premium revenue, so you can have a lot of revenue, but a good VC will not pay you a high multiple. I can tell you now, like to get anything more than 5x revenue for an InsurTech, tough. Let's just call a spade a spade. You can have much lower revenue as a company like a ChipperCash that does remittances, or a payment integrator like a Flutterwave. You can have very high transaction volume, very low margins, but a very high revenue multiple, right? Because even though the revenue isn't as high, it's more sticky, if that makes sense. I'm using a lot of VC jargon, so please excuse me. So the insurance industry needs to move into a model where you're not reliant only on the collection of premium. The moment you can make revenue from transaction fees, from a subscription-based model, and premium collection, now you can start, the weighted average multiple goes up. And that's when you can start generating higher valuations, and therefore get to your status.
Okay. All right. Thank you very much.
Zach is dropping a lot of gems on this call, and I think that if they're entrepreneurs or soon to be entrepreneurs listening, I think this is one of the areas where there is a lot of space for innovation. But like with the last 5 minutes, right, Zach has essentially laid out, the areas that you should be focusing on, a summary of what the opportunity is, and the actual distribution of the opportunity. also laid out, where you want to be as a company, right? Which sometimes a lot of people don't really get a chance to analyze. And you would have paid an analyst to be able to kind of understand, where your company should be in relation to the market, right? And so that's a ton of value add, for the discussion. What I'll add to that is also for, to be entrepreneurs, to also think about the fact that, that distribution that he talks about, more and more from a fintech perspective and an InsurTech perspective, right? Distribution for InsurTech today is a lot tougher, given the fact that traditionally insurance has been sold using people going to doors and going to knock. Today, we're seeing that fintech is rising above that, primarily because it's playing on technology, right? People have already experienced a behavioral change, right? And technology is aiding that. On the insurance side, we haven't experienced the behavior change yet, which makes technology a lot harder to be able to pick up and then provide that multiplier. And so how do we need to really think about it? The way that we think about that, and for other entrepreneurs who are kind of thinking about it, is to look at all of the different areas where people are already adopting technology, right, and layering on. So we talk about embedded insurance as being a huge part of the opportunity that exists across board, right? Whether it's in the States or it's in Africa. And we need to think about things from that standpoint, right? We talk about the church, and I love to hate and all of that, but the church as a distribution, opportunity is also huge. Why? Because if you go to any church in Africa, and I grew up as a mass server, right, and spent a ton of time in the church. Every time someone passes away, part of the reason why my grandmother, my mother, and a bunch of other people go to church is because it provides in its own way a social cover, right, for the hardships that you go through. Imagine what a widow would do when when a woman loses her husband. She belongs to a church. She now has a community of people who don't just provide like comfort and emotional support, but also provide, financial support. And so when you think of these churches around, they are potential points of distribution, right? By providing a church with an incentive, right? And the church has a lot of incentive. Right now, they take money out of their collections to be able to support people. What if you could build a product that essentially allows the church to insure every member and peg it to the dues that they're paying, right? Because everybody pays tithe and dues at church, right? You could start building out a distribution model that actually works with people. Think again about the things that are really common with us. And I didn't grow up like fancy or anything. Lotto kiosks are really, really common everywhere you go in Ghana. These days, they're getting digitized. People bet a lot. What if you could bet and your losses could get insured the same way we do here, right? By finding ways in which we could start to make insurance a thing that people recognize and understand, right? It will be easier for us to reach that point of behavioral change, which is going to create more opportunity for InsurTechs. Right. The second part for Zach's comment around part of the challenges for InsurTechs that want to become unicorns, right, has always been regulation. And I'm not going to spill the beans here, but this is a primary part of why Flurry operates the way it does, and the opportunity that we have, right? We started out with our pilot in Ghana, came to Nigeria. Now we're in Zambia, Zimbabwe, all without having to have, a local establishment, right? And that's primarily looking at, the dynamics that tie the relationships that we're supporting in all of our stakeholders, right? And so while we recognize that opportunity, I think that there are other ways that even InsurTechs that are present on the continent and operating there to start to look at stakeholder relationships versus the traditional way in which it's been done. To start to scale some of these other issues that exist. And there are ways of doing that.
Yeah, thank you very much. So because of time, I just want us to close up with Ashley, right? Looking at all of these things that have been said in terms of innovation and product distribution, how we can rethink all of these things. Bima Lab, right? It's a good opportunity, and it stands out because it's a situation, it's a program where FSD Africa is coming here, bringing an initiative, but then it's involving the regulator. Back to the point that Sam did make, right? Speaking about innovation and then being a part of accelerator programs such as this, I mean, what benefits can this bring for the space in Nigeria and all of the other markets where this has been happening?
Yeah, sure. So you mentioned FSD Africa. FSD Africa is a sister organization to Athena, part of the same FSD network. And Athena is a local partner on this Bima Lab program that just launched. We're providing some kind of evidence and support to the market as they launch in Nigeria. So Bima Lab, I think it's a really interesting model, and they've had some traction in other countries because, as you mentioned, it's a sort of an acceleration program, but also really brings in the regulator quite closely. So we know for Athena, we work with the various regulators. We've had conversations with NICOM, and NICOM has seen our data and said, look, we don't want 2% of adults to be assured in Nigeria. We need to grow that number. And they've really demonstrated a lot of interest in driving innovative, inclusive solutions. So I think NICOM really has the willingness, but also the understanding that for them, as for all regulators, there's some evolution required in terms of regulation, in terms of processes and procedures, in terms of skills of their workforce, et cetera. So that's a place where Athena and partners are supporting. And I think for the Bima Lab program specifically, bringing the regulator in to the conversation is great because you have that engagement from the get-go. One of the things, and this is kind of across fintech in Nigeria, one of the challenges we see that I think is really kind of a low-hanging fruit for us to solve is just communication in the space. Yeah. So fintechs tell us that they sort of don't understand regulation. Then we talk to the regulators. Regulators say, "Oh, it's so clear. Look, it's written down here in black and white." The fintechs say, "We don't know who to call. They don't answer we send a message. We can't get a response for a few months." So I think that that kind of engagement is an advantage to the program. We also hear. And so this is actually one reason I think what Zach is doing is really interesting. But we hear from some other investors in Nigeria that, they have more sort of foreign capital that wants to come in and invest in the market, but they're struggling to find investable businesses because a lot of the investors here are not interested in engaging with the very early stage companies and doing some of the hand holding and support, right? It's not the model. They just don't have the capacity for whatever reason. So I think that, part of what I'm hoping will come out of the Bima Lab program is some very strong investable kind of businesses or opportunities. So I think the application closes tomorrow. So we'll see. We'll hope to see a lot of strong applicants from Nigeria, and we look forward to kind of supporting them in that journey.
Right, great. Yes, absolutely. And I mean, this is also an opportunity for everyone who is listening and watching. I mean, the application is still up until tomorrow, so you can definitely apply. So, I mean, thank you very, very much. It's been a super amazing conversation. I'll give it to Folumi. I think we have a few questions from the audience. There's a question around Zach's album. So they want to get your album. So, but yeah, follow me.
Sure.
All right, again, thank you everybody for this amazing and very, very interesting session. Like Damola said to Zach, someone is asking how they can access your album. Perhaps they could understand how you get the inspiration for VCs and, those that you actually, invest in. Perhaps that would sort of give them an inspiration.
Sure.
All right, so
I'll post a link.
Okay, awesome. That's perfect. Then to you, I know that Ashley mentioned this in this last conversation, but then again, I would just like to ask, so this is coming from Ebimowe, saying that how were you able to navigate around the regulatory body of insurance sector in Nigeria, precisely NICOM, especially to for InsurTech startups. Now, this is to you and to Gbero as well. Like, how were you able to manage those regulatory expectations?
Oh, I'm sorry. I thought that was for the providers. So I think on the insurance side, as I mentioned, and I know, so as I mentioned, NICOM, I know is really interested in driving a supportive regulatory environment for InsurTech. Partnership in the BIMA Lab is one example. I know that they're also looking at setting up a regulatory sandbox. So that's an opportunity for, new business models that don't fit neatly within the existing licensing framework to be tested in this market, and for the regulator to also get more visibility into what models are sort of entering the market. I would say that there's kind of good initiatives in the pipeline. I know that NICOM is also sort of relooking at its policies, procedures, to better enable innovation. Like I said, I mean, I think as I think George Bernard Shaw once said, the only mistake with communication is the error in thinking it's been accomplished, right? So I think that one opportunity is also really just having more conversations. And that's something that, Athena and others in this space, strive to do is convening discussions. So that's a place where we're also happy to kind of serve as a resource from all sides for those who want to have more engagement with the regulator and are not sure how to do so. We're also happy to kind of talk to you and then serve as an intermediary or convener to drive some more of those discussions.
Awesome. Thank you very much for that. Gbero, any thoughts on this?
Yeah, so similar to the response from many regulators that, regulation is clear. I think insurance regulation is super clear. And for us, we want to just play within the existing regulatory framework. So we always figure a way how to play within the existing framework. Plus also engaging regulators from day one has always been our own approach. Plus not just the regulator on NICOM side, we want to work with the Insurance Association actively to figure out what are the pain points and what are the areas to innovate genuinely. So I think it's just really, like you said, a communication, trying to improve communication with regulators and actively carry them along with the plans there.
Awesome. I think that actually sort of addresses it, and I like the fact that, again, with the initiative of the BIMA Lab in Nigeria, that sort of shows regulatory impact in that space. So kudos and thank you for those responses. Now to Zachariah, this is from Joel. I'd like to say that this is a question from Joel. He was part of the BIMA Lab winners in Kenya. So he's sort of asking that are there any recommendations of angel, family offices or VC that look at early stage startups? So would you have an answer to that?
Yes. I mean, are you talking specifically about InsurTech startups or just general early stage startups?
InsurTech startup, I reckon that's what it is.
Yeah. I'd say so. Quona, Quona, is a very strong VC fund. They're focused on financial inclusion, and insurance is a big part of their portfolio. And they cover Sub-Saharan Africa, Southeast Asia, and Latin America. And they include Pakistan as part of Southeast Asia and that demographic, and Bangladesh. But they typically come in at Series A and beyond. I would say, start with all the accelerators on the continent. So, so obviously Bima Labs is very high up there, but there are, several other insurance-focused accelerators on the continent. From a seed stage perspective, there's a fund in the U.S., a fund of funds called RallyCap, RALLYCAP, RallyCap Ventures. They are made up of pretty high up senior executives at Branch, Tala, Stripe, Plaid, and some of the larger fintech unicorns and InsurTech unicorns in the US and Europe. And they've got a fund that specifically looks at InsurTech companies in emerging markets. I'm trying to think of a specific InsurTech fund in Africa, early stage. I can't think of anything that does specific InsurTech, but a lot of them sort of get clubbed together with fintech. But if someone else, I can see Ash may know something. Do you want to add something there?
Yeah, this is also not InsurTech specifically, but I know they've included InsurTech, which is the Catalyst Fund.
Oh yeah,
which is also sort of a kind of has similar funders, and Athena has kind of partnered with over time. And I know that they've invested in some early stage InsurTechs, and I feel like they've got a good team.
Oh, and Lirius, sorry. They're based in South Africa. Let me just put it in the link. Again, this is the first time that someone's doing a Zoom thing and you can't see the audience, because I understand it's being streamed live. But that particular fund, Lirius.coza, it's the VC arm of Hannover Re, and they specifically back InsurTechs that have, but ultimately it has to result in some sort of premium collection to Hannover Re, because it's the InsurTech arm of Hannover Re. So they're a good InsurTech focused CVC, a corporate VC. Like Bamboo does quite a few InsurTech deals with a slight bias towards Francophone West Africa. But yeah, Bamboo is. But also, guys, like sorry, I'm being very, very colloquial here. Go to all the top InsurTechs in Africa that have raised good money and look at who's on their cap table. Do some homework, right? So Lamy. Someone mentioned Lamy. Someone mentioned Pineapple in South Africa. Naked, backed by Sanlam. What's the other InsurTech in Kenya that raised a boatload of money recently outside of Lamy? What's it? But go to these top InsurTech rounds and look at what VCs back them. And then go to those VCs and look at their portfolio, pages on their websites. And that's how you get in touch with them, right? As founders, you have to really do your homework on your funds and don't expect the mountain to come to Muhammad. Muhammad must go to the mountain. I'm stepping on a lot of religious toes here, but do your homework on your funds, right? Super important. Way too many founders don't diligence their VCs. And Crunchbase is, has quite a good repository of data as to who backed. So what Crunchbase will give you is they'll tell you who backed a round, right? They'll tell you how much they backed, when it happened, and what the round size was. What they won't tell you is what the valuation was, which is okay. But you want to know who led the round, and that's how you suss out good VCs, right? So, yeah, that will be my advice.
Thank you very much for this, useful links. Just so I see that yourself and Ashley are actually putting in links, and we're dropping this for our audience who are able to pick most of this. I like to use the word Sam used, gems, right, for that. So before we let you go, we have just about 7 more minutes to go. This last question will be to Ashley. And I know that one of your pillars for Athena really has to do with, learning and advocacy. Right. So there's a question here that says that what exactly are you doing in terms of learning in that space? Then this would also bring me to asking about your involvement with the BIMA Lab. So would this sort of bring in other learning objectives, to the accelerator program, especially for people that are looking to play in that space? Now, these are not existing startups. These are people that are at the stage of idea generation. So what exactly are the learnings from Athena?
Yeah, I think that's so it's a big question. I think that really one of the reasons that Athena was founded was because there was a lack of evidence around financial inclusion. So as I mentioned, one thing that we do in terms of just information is just do some basic measurement and research and really try to disseminate insights as broadly as possible. But then I think that the question around learning is also important. I mean, we've run in the past kind of innovation funds as well as a fintech challenge fund. And I think that, one point of learning we've seen is actually the value of, in addition to funding, like advisory support where it's needed, for actually at all stages, even businesses that have existed for a long time, but are trying to innovate and do something new. Really being able to tap into kind of expertise to take a test and learn approach, which we've looked at building more into kind of our grant funding structures as well, is important. I think that maybe one specific thing that comes to mind for me that we've really not touched on yet in this discussion is that so one learning point we took from our last FinTech Challenge Fund is that for Athena, gender is something that we really are thoughtful about. Driving women's financial inclusion is an important strategic target. So all of our grants, we had targets around reaching women. One learning point I took is that, looking at the performance, all of the fintechs kind of struggled to meet their targets related to reaching women. And as we talked about it, it became clearer that their intent was there, but the challenge was that they struggled with the how. And so that's a learning point that we've sort of taken to thinking about supporting the industry in closing the gender gap and financial inclusion and reaching women more effectively. And we're now kind of working with the industry more around implementing this women's financial inclusion framework. But I think that there are some there are opportunities for InsurTechs and other fintechs to really take advantage of more kind of human-centric design principles, at least leverage the information that's available. And then there are a lot of partners who are available to help. It kind of drive solutions that reach women and reach other underserved groups more effectively, including Athena. So I think that, starting with an understanding that reaching, groups that are excluded are kind of excluded because they're oftentimes more difficult to reach. It takes some really deliberate, skilled effort to reach them, but it can be done. And there's a wide partner network, including from Athena, that's available to support.
Great. I think that's about the end of this. Thank you very much for your contributions and for this awesome discussion. A lot of people have been giving positive feedbacks. And again, like I said, thank you so much for the nuggets, because I'm pretty sure that people will take this home and work on it, because this is a time where a lot of people are looking for how to access funds to, develop their ideas and what platforms they have opportunities to leverage on, to jumpstart some of their startups, or basically to just help expand these businesses. And like what Zachariah mentioned, in terms of finding the actual niche and focusing on that area to grow and develop, where doing your homework, doing your research in terms of collaborating with people, as well as finding out how these resources are made available at certain points in time. So yes, these are awesome conversations, and we want to say thank you for everybody that took time out to participate in this discussion. Thank you so much. Again, this is to say that we would continuously carry out these conversations to just ensure that we're able to move these conversations forward, and we're able to increase the market, the insurance market penetration on the continent. So I want to say thank you again. Thank you, Samuel. Thank you, Guero. Thank you, Zachariah. Thank you, Ashley. And of course, to my very co-host, thank you, Damola. Over to you.
Yes, I really appreciate the insights from Ashley, from Zach, from Sam, from Benro. Thank you as well for building what you're building, for doing what you're doing. InsurTech, we believe that InsurTech is the next frontier for fintech, and some of these things are what we are doing to help jumpstart that. And we're happy that you are part of this.